offtake was not as anticipated. So we did have to cut down our production in the month of April.
Market ends with about 0.6% in terms of gains, 7860 for the Nifty.
We come to the end of what has been a rather volatile and lackluster day. We end marginally in the green, but we've come off more than 60 points from the highs of trade on the Nifty.
My sense is actually that we could have a period of asset deflation, where asset prices just don't perform particularly well.
The point of getting the bankruptcy system established in India is if we can run through 2 or 3 cases in that fashion, then, the fear of hanging concentrates the mind wonderfully.
All the steel industries which come and discuss the issue with me now, I think they are fairly satisfied with the kind of steps the government has taken, and I'm told their balance sheets have started reviving.
It's been a very decent day, you'd have to say. I mean, there has been a cut of 0.2%, but the market has recovered quite a bit.
It's been such a disappointing day.
Oh yes, and the Nifty has broken the 200-day moving average of 7805. So I guess a lot of psychological and technical levels have gotten broken on the downside.
I thought that people who now do P-note generally have to have plus minus near FII standard of compliance before the P-note issuer is willing to issue them P-notes.
The overall advance declines itself is 2.5 is declining to 1 advance.
Yes, and at the start of trade, it was even keel, 1:1. By the end of it, 5 stocks in the red.
Hello and welcome to Taking Stock. This is the show where we prepare you for the trading week ahead. And this edition of Taking Stock, as you can see, comes to you from a very cheerful atmosphere. This is the cafeteria of Prabhudas Lilladhar. This is the brokerage which is now being recognized as one of the top 100 brands in the country. And their leading lights, AMISHA and DILIP, who are with me, lead a PMS product which actually has returned 40 to 50% returns over the last 2 or 3 years, at a time when the Nifty could return perhaps 15% or thereabouts. Even in the last 1 year when there were negative returns, this fund has managed to post positive returns. So we are going to prepare you for the next week very well and for the year ahead. But for the moment, AMISHA, Dilip, before I come to you, just a word on where the markets are stuck. This week, the Sensex and the Nifty have ended about 0.7% lower. But you will have to say that the range that we are tackling is basically 7,700 to 7,900. You will have to say that the market has been able to bear the downside very well. There have been a couple of shocks. You had the P-note rules that were announced by SEBI. You had the Mauritius treaty which hinted that capital gains are going to be taxed from these countries. All these could have been negative news for the market, but the market braved them extremely well. Even from the global markets, the hint that the Federal Reserve still keeps the rate hike in June alive on the table was taken with some equanimity by not just global markets, but more importantly by Indian markets as well. So there is a lot to say for the protection of the downside. But for the upside, the markets have not been able to pierce that 7,950 mark and has bounced down from it several times. So that makes it a very formidable resistance. We got the Bank Nifty punished rather badly, I think 1.2% lower, but specifically stocks like Bank of Baroda, State Bank have taken it on the chin, especially after Bank of Baroda's numbers. So there is a goodish bit of negative news as well that the markets have had to contend. Actually, CLSA's Lawrence Belanco speaks of potential downsides for the US and the European markets as well in June, July. So there could be headwinds, especially if the rate hike fears from the Fed became very real. That's the backdrop in which we are facing the week ahead and the month ahead. But to take us through all that, we have AMISHA and Dilip joining us. Well, gentleman and lady, thank you very much for joining us. Let me start with you. Dilip, what's your sense? Is 7,900 going to be a near-term roof, and we will have to wait for perhaps Brexit, perhaps the rains? Have we to wait for at least a couple of months before we break it?
Latha, surely it looks like that some of these events are bound to prove a little formidable, a little overwhelming in the short run. So possibly this, as what you mentioned, as also the fact that we are running into a Fed rate hike plus possibly a redemption of our coming FPNR. I think some of these events will put pressure on the economy, currency, interest rates, everything. But having said that, I think this market, even if it comes down for whatever reasons, I think that correction will still be viewed as an opportunity and should be taken as an opportunity to further acquire, because this market still remains a market to buy on the dips. And I'm sure that some of these events will prevent a runaway rise in the markets and possibly see some kind of either consolidation on the sideways or maybe some correction.
Okay. I will come back to you in terms of what you're expecting by way of earnings growth and an index growth itself. But Amisha, how protected is the downside? The market took the recent negative events very bravely. Not much was lost, probably 1%. Do you think 7,500 is sacrosanct, 7,700 is sacrosanct, or even is 6,800 possible?
No, I am in the camp. I feel that 7,500 will be in most likelihood respected. And in any case, in any eventuality, if it is broken, it will bounce back to those levels pretty quickly. And some of my confidence stems from the fact that despite the fact that in a third consecutive year, the Nifty earnings are hugely disappointing and maybe somewhere just close to 360, 370 rupees kind of Nifty earnings. But it comes at a cost, and cost of cleanliness, no risk, less uncertainty. And we have seen how some of the stocks, when they give this kind of transparency and reliability, they trade at higher P. So that gives me a lot of confidence that even if we feel Nifty is at 17 times or whatever, it is on the most depressed earnings ever. So it gives me a lot of confidence. And I think one more thing to add is, those state elections as such are not as critical as we keep saying, but this will definitely lead to passage of GST, which will once again lead to more action on the ground, which is what we keep hearing that it is little less. So a combination of monsoon, pay commission, GST can lead to sustainable improvement in activity on the ground.
Well, you spoke about earnings, so let me take you all on that first. In your universe of stocks, your PMS stocks which have done so well, what kind of an earnings growth are you looking for in FY17? What was your universe giving you in FY16, and what do you expect in FY17 for your universe?
Well, let me put it this way, that we have been following the index, okay, and then we have a top picks. Okay. So these top picks are the ones which keeps on changing.
Okay, then let me look at your Nifty earnings itself. What are you all forecasting for FY17?
So interestingly, as what I said, when we started off the year, all of us thought that we are going to have something like at least 18 to 20%. And I think as we know that the year ends with most of the results out, it's going to be 0% or maybe negative. So possibly next year too, from the current level, we feel that maybe we will see at least 18 to 20% growth in Nifty.
At least because the base is bad.
Correct. So from 430 earnings expected, we might wind down at 370, and one is looking back to the 430, 440 kind of number for Nifty EPS for FY17.
Okay. Well, this week itself, we saw the PSU banks taking quite a bit knock after Bank of Baroda's numbers. I see that you all have a lot of financials, but they're all private sector. Aren't HDFC banks and IndusInd banks and Kotak banks? I mean, Kotak Bank is, I think, over 5.5 times price to book, over 5 times price to book. Even at current levels, you will persist with these stocks, HDFC, IndusInd, Kotak?
I think important thing is that probably even next year, public sector banks will have to keep focusing a bit either on, how to really take care of these assets which they have declared NPA, but they really need to realize something out of it. Okay. And for them to really get something out of it, be it 50 paise, 60 paise, or 40 paise, there are certain policy level changes that we need. Banking Bureau will have to
I take your point that you don't want to get into public sector banks.
So
aren't your private sector banks expensive?
So for Kotak Bank, just to give you an example, as per my analyst, we are heading towards roughly 38 to 40% bottom line growth, and on that FY17 it is less than 4 times book. Okay. And for 2 years we are looking at ROE growth.
And just to add this point over here, I think in the coming 1.5 to 2 years, we'll continue to see the public sector banks ceding market shares further and further to some of these private sector banks who are very well capitalized and able to do business.
No, there is a contraction of their balance sheet. Of that, I take it. What about the non-bank finance? I see Capital First in your list. Will you add more NBFCs?
Well, I think this is one space which we think that we are still researching quite a few stocks, but I think certainly this space looks the one which can give very good returns. I think Capital First is one of the stocks that we like. We think that they are going to grow by something like 45-50% in the bottom line for next couple of years. Of course, their ROEs are bound to improve. They are just around 12.5%, but I think that also will go right up to around 15-16% in next 2 years' time. And they will require some capital. But I think they are doing all the right things to really capture the growth at the moment.
Okay. Well, Amisha spoke about the GST being passed. I would want to know whether you want to play that theme, but we have to take a break at this juncture. So we are coming back with a lot more questions and stock suggestions from our team. But before we slip into the break, we got a lot of excellent opinion through the week. Just listen in. We are back in a jiffy.
I believe that stock selection will become again much more important than what the indices do. And this also applies to India, where if you pick the right companies, they can enlarge their market share within the Indian economy. Or if they are very well run, they may be actually acquired by other companies and so forth. So I think that individual sectors and individual companies will be more important than the overall index. Consumption looks good. The problem is that stocks are expensive.
India cyclically is turning, and that is the key part, that rains have to come. More important than what happens in US. So rains have to come, and the earnings already seeing, by the way, if you see the earnings of this quarter, if you do non-financial, ex-financial, the earnings was not bad. And in financial it is bad. Clearly we know why it is bad. It is bad because of provisions made by state-owned banks.
This area of 7,900 to 8,000, where we are stuck, is very natural a place for us to find resistances. One is if you draw a downward sloping trend line from the top, it somehow comes right there. You have the 200-day DMA. So, and a previous high which was at 8,000 Nifty. So I feel that when Nifty comes out of 8,000, which I think, so even if you may have a short-term correction, which I think we may have because of the way the dollar is performing, and I feel there will be a little weakness in emerging markets and commodities in the short run, but I do think sooner or later this 8,000 will get taken out of the Nifty and we will move towards the 9,000 level.